Welcome to the Prudent Pulse. We're covering what to look for the week of August 14th to the 18th. Now, last week we discussed Fitch's U.S. debt downgrade, and now they're warning of downgrading U.S. banks as well. Now, despite this year's stock rally, regional banks are still down almost 20%, and even large banks are vulnerable to cuts as well. Now, in the past, we've also talked about China's economic troubles, and China retail sales disappointed again in July, and their data across the board is coming in weak. Now, after inflation fell to zero in June, and we talked about deflation fears, consumer prices actually dropped in July, to which the PBOC cut rates unexpectedly for a second time in just 3 months. Now that's a very different situation than the US, where futures aren't pricing in a rate cut until next May. Now, an article in the FT showed that companies don't appear to expect rate cuts anytime soon, and despite the jump in the cost of debt capital, US companies are still issuing bonds at a very robust clip, signaling an anticipation of continued growth, as well as a willingness to finance it at current levels. And that's this week's Prudent Pulse.